Hey folks, welcome back to another challenge update where I'm trying to make $10,000 in 50 weeks. So far it's been 8 weeks and I'm about a quarter of the way there at 2571. So overall I'm making pretty good progress. And last week actually turned out really well. I made $473 in net premiums from selling puts and calls. And the stock price of Google also went up from 107 to 110. So my profit jumped from 1763 to 2571. So let's see what happened in the previous week. As you'll remember, I sold a couple of puts with the highest strike price being 107, and I sold a 113 call, and I basically wanted Alphabet to finish in between these two purple lines. On Tuesday of last week, which was right here, I mentioned the stock was down at the lower side of this channel, so most likely it was going to head up, which is why I basically sold an at the money put, but I made sure my call option was higher up so that if the stock price went up, which is what I was anticipating, then most likely it would stay within these two lines. So here's what happened. Google finished at 110, which is pretty much right in between these two strike prices, which means all of the options expired worthless, and I was able to capture 100% of those premiums. Now, what also helped last week was that implied volatility was pretty high at 43, and the higher the IV, the more money option sellers like myself can make. And one reason IV was so high last week was because Alphabet was down at pretty much the lowest point it's been in quite a while. Okay, so what about this week? Well, looking over at Yahoo Finance, we can see that Alphabet is actually down today, which is interesting because all the major indexes, including the Nasdaq and S&P 500, are actually up, implying the weakness of this stock compared to the index. We can see I have some lines drawn out here. The main one is this blue line here, which is the 21-day EMA. And that's an important one because ever since like last month, the stock went below this blue line and it had trouble going above it, right? So it went above this 10-day moving average fairly easily, but now we're kind of at a tipping point where it could either go through or it could get rejected and bounce down from this blue line. And because the stock is showing weakness today, despite other stocks being up, it's just one indication that this blue line is probably going to hold, meaning we're going to get a bounce from that. However, going back to TradingView, we can see that even if we get a bounce off of this EMA, we could get another bounce off of the bottom of this channel, which has been in play, as you can see, for quite a long time, ever since like the end of May, basically. So what I'll probably do with my put options is raise it so that it's right at the bottom of this channel, somewhere around 109. And then I will move the call option up to above the EMA to maybe like 115 or something. And this way I'm still respecting the upward move, which is what I think the stock is most likely going to do now. Because whenever it reaches either the bottom of this channel or the top of this channel, it goes all the way to the other side as it has done in the past. You can see it doesn't usually revert back on itself halfway through or even a quarter of the way through. So having a couple of puts at 109 will give me a nice premium because it's not far from the current stock price, which is 110. So I can earn some nice income from that. But at the same time, it's near the bottom of this upward channel, so it's not likely if the stock were to fall much below the 109 price target. Now, if the stock continues to move up, which is most likely what's going to happen, then it should at least pause around this blue line here, the 21-day EMA. So the 115 call is far away enough to hopefully not have the stock price go in the money by the end of this week. So let's take a look at the option chain here. Okay, so at 109, we can make about $1.06, and that's for the put. Now for the call, I'm going to see what kind of premiums I can get here. 115 has a delta of 14, so that may be a little bit too risky. I might go $1 higher than that and go 116, and that'll make about $17. So I'll make about $105 from the put each, because I'm going to have two puts here. And I'm going to make about $17 from the call. And altogether, that's going to give me $229 if this gets filled, minus a few dollars for commission. I'm actually going to see if I can get it filled at maybe 231. I'll try this first, just to make like a couple dollars more. And then I'll just wait a couple minutes and see what the mid price will do. Looks like it is going up, and now it's going back down. Okay, I'll drop this to 227, so if it goes there again, it'll get filled. Of course, even if the stock price doesn't move over time, the value of this will get lower and lower until it reaches 0.
Autofilled.
Okay, and it looks like that was filled at 227, which means I sold 2 put options with a strike price of 109, and I sold 1 call at a strike of 116. So what I anticipate is for Alphabet to finish this week, which will be on the 16th, so that's 4 days away, right here. Finish the week somewhere between these two purple lines, which I think has a pretty good shot of doing so. And assuming I capture 100% of the premiums, this would be $227 minus $141 for commission. And if I take the current exchange rate, that'll give me $293 in option premiums for this week, which will make the total premiums earned $25.29. And Google has an implied volatility this week of 34%, so lower than last week, but within the typical range. So hopefully Google continues to trend upwards, or at least not go down too much. And by next week, this blue line here continues to stay above this yellow trend line, which is what I need it to do in order to hit my goal of making a 50% return in 1 year. Anyway, thanks a lot for watching, and I'll talk to you in the next one.